Hello everyone. Today I am going to provide you with an overview of MCX crude oil for the coming week. And prior to that, I would like to discuss what strategy and outlook we had last week for crude oil, how it panned out, and what was the strategy which we have initiated as per the view and the market momentum. So last week, as on 31st of July, we have published the weekly report for 1st August to 5th of August 22. On 31st of July, crude oil was trading at 7842 mark, and we have given the outlook that the bias is buy on dip and sell on rise. Since last few weeks, we have been negative on crude oil below 9200 mark, and we have mentioned that this counter can slip down and retest the lows of 7000 to 7200 mark in days to come. So previously we have seen that this counter has entered into a kind of oversold zone as per the daily charts, and thus we have mentioned that a pullback can be expected, which can be looked for selling. In last 3 weeks, we have seen that crude oil slipped down to 7300 mark before a pullback towards 8300 mark, and again it reattempted and tested the lows of 7400. Last week 7842 was the closing. As per the write-up, we have mentioned that there can be a kind of tug of war at around 8500 mark, trading below which the bias will be ranged to down, and sell on rise is the outlook, while the supports will be at 7200 and lower levels, which can attract some kind of buying interest. In the current week, we have seen crude oil has slipped down from the highs of 7800 to 6944 levels, and it witnessed some kind of pullback from those levels to end the week at 7086 levels, down almost 10%. During the week, as on 3rd of August, we have initiated a bearish strategy when crude was trading at 7447 levels. We have recommended a strategy with a negative bias. We have bought 7600 put, we have sold 7200 put, and again sold 6800 put in the ratio 1:1:1. The break even in this strategy was at around 7530 levels. As per the payoff diagram, we can see here, closing over and above 7600 mark would have given a hit of around 6900 per lot. On the flip side, trading below 7400 levels, the maximum gain was at around 33,000 levels per lot. Since last week ended on a negative note at 7080 levels, this strategy was in profit and was showing a return of 8900 rupees per lot. Apart from crude oil, we have also got a trading profitable opportunity in gold and natural gas. Last week, as on 3rd of August, we have recommended a bullish strategy in gold at around 5145 levels. We have taken partial profit at around 52045 levels, and we have booked 32,500 per lot. We have trailed rest of the position. We were expecting gold to test the highs of 52,500 before slipping down. It worked in line with the expectation. It almost made a high of around 52,500 before slipping down. On the flip side, in natural gas, we had the outlook of range to pull back from lower levels. The counter was trading in oversold zone and had the major support at around 600 mark. So we have recommended a kind of pullback strategy on 3rd of August when natural gas was trading at 622 levels. Natural gas being a high beta counter, it witnessed a pullback towards the highs of 670 before ending the week at 642. So this strategy was also in profit, and at the end of the week, it was giving us a return of 7,500 rupees per lot. Now coming back to the crude oil for the coming week. Crude oil, which ended last week at 7086, again the bias continues to be range to positive. We believe that 7,000 will be a kind of tug of war for crude oil, and pull back towards 7600 and higher levels. It can again witness some kind of selling pressure. So we believe that pullback towards 7600 and higher levels can only provide a better risk reward ratio for going short. On the flip side, on the lower end, this counter has immediate support at around 6800 followed by 6500 levels on the lower end. We believe that though the bias will be sell on rise, but at these levels, since the counter is trading in oversold zone, we can expect some kind of pullback, and those pullback towards 7600 levels can be again looked for some kind of bearish strategy. Over a period of time, we will be expecting crude oil to test the lows of 6,500 followed by 6,000 levels on the lower end. So the positional bias continues to be sell on rise, but because on the short-term time frame, the counter is slightly in oversold zone, some pullback can be expected towards 76.50 and higher levels, which can be looked for, again, selling. Thank you very much for your precious time. If you find this input valuable, you can contact us on our given email ID as well as the contact number. It will be a pleasure for us to share further weekly outlook and the strategies in days and weeks to come. Thank you very much.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.